Welcome to the Post Purchase Pro Podcast.
This is the only podcast that dives deep into post-purchase marketing to help Amazon sellers increase sales, ranking, reviews, and profits. It's everything that happens after the initial sale that makes a difference. We call this the back end. Hello, and welcome. This is Sean Hart, one of your hosts of the Post-Purchase Podcast. I have a very special guest today. And again, I must tell you, David, that my partner in crime, Seth, can't be here today. Unfortunately, his wife had to have a doctor's appointment, and that's where he's at. So I have to handle all these budget buttons and gadgets and technology over here on my own. So forgive me. I am going to make a mistake, but I think we're off to a good start. I want to welcome Mr. David Fairley. Now, I'm going to let you toot your own horn here in a second. But first of all, I want to welcome you to the Post Purchase Podcast. David is founder and president of websiteproperties.com. He's what Seth says is an OG, like you were around before the internet was cool. And I want to be the first to welcome you to the Post Purchase Podcast. David, say hello.
Thank you, Sean. Great to be here. Pleasure. Looking forward to this conversation.
Definitely. I am as well, especially, Seth and I are completely addicted, David, to creating businesses and then exiting. Right now, we've had 17 exits under our belt in the last 8 years. So it's almost a way of life at this point. Our podcast is sponsored in part by Getida, our friends at Getida. Getida are handling maximum refunds with data-driven technology. Maybe you're aware of them, David, but we love Yoni and his team over there at Getida. So, welcome again, David, to the Post Purchase Podcast. And today we're going to talk about optimizing your FBA business for your inevitable exit. It's not a matter of if, but a matter of when. If you stick around long enough and you have a successful business, someone's going to come along and make you an offer you can't refuse, right, David?
Exactly. And that's what we're here to help people. As you mentioned, we're one of the original gangsters in the space. I started myself online. I'm an internet entrepreneur, going back, starting around the same time that actually Amazon got started with Jeff Bezos in his garage up in Seattle. That's kind of when we entered the scene. I was selling hammocks, and that turned into hammocks.com, which was I exited in 2002. And what led me into the brokerage business was actually trying to find someone that understood the fundamentals and the valuations of businesses that were online. And long story short, I ended up representing myself and had to go through those some of those pitfalls. But over time, I ended up representing other people in the space, and Website Properties grew from that. And we've been active in the market for 20 years now, and dealt with a lot. And we've seen a lot of interesting niche businesses created online, and of course, in the last 10 years, with the advent of Amazon's FBA program, has just been exploding with wonderful opportunities and great businesses created rapidly by folks like yourself. And 17 exits. That's incredible. You guys, you guys are you could be brokers yourself by the sounds of it at this point.
Yeah, it sounds like it. We love growing and selling businesses. We love taking that low hanging fruit, those early double digit growth. And, after 2 or 3 years, always get bored, no matter what the brand is. Right now, we're building an agency. For those of you that are watching the live stream, David, right now, we're streaming live on Facebook, on, LinkedIn. We have 2 YouTube channels going, and Twitter. So this is being streamed live as we speak. The audio version will be produced here in a few weeks and go out there on all your favorite podcast platforms. So we'll share that with you. If you are streaming this, if you're watching live and you're growing a brand now, specifically a physical product brand using the FBA system at Amazon, then don't go anywhere, because we're going to pick David's brain here about getting maximum enterprise value and taking the maximum amount of cash that you can based on the structure of the deal that you put together. So, David, this is your first question. What's the biggest mistake that you see a lot of Amazon sellers make when they're prepping their brand for an exit?
I think the main thing is just fundamentally the most important thing that buyers look at is just clean. They're looking for clean financials. Amazon, thankfully, is the third-party platform. Most of the data and revenue detail is easy to extract, but it's also just managing your numbers through your QuickBooks, and you're aligning things up with your banking statements and whatnot, so that you can get through when you do go get into negotiations and get an agreement. you have to get through due diligence no matter what. So the foundational element is always, just making sure that your financials are clean. And one of the things that people make the mistake of doing is they like you, there's a lot of serial entrepreneurs out there, and that they've got so many ideas. They end up developing multiple different businesses, different brands, and they throw it all under one company. And they're not always interested in selling all of their assets at once, and so they've got these commingled financials. So we always recommend like that can become a real, very challenging when you start looking at tax returns. And a lot of the deals and offers that are coming in now in this marketplace are offering SBA or wanting to use SBA lending, and you've got to have clean tax returns. And so I think that's just a fundamental place to start. From there, there's a number of other attributes that we recommend our clients pursue, and Amazon sellers particularly. We can go through that. I'll just pause for a second just to get your feedback for a second, and then we can jump into some of the other fundamentals that that buyers are asking for. I think the main thing is not to, there's plenty of regurgitated content out there about the 10 steps and 10 things to do this. It's really just, most of it's common sense, but there are specific things that Amazon buyers are looking for that we can touch on.
Great. So I sold my first business at 27 years old, and it was an easy thing to do because I sold out to one of my partners. So simple, right? I called it an exit, put a notch in my belt, made way too much money for a 27-year-old idiot kid, but it kind of it put a fire in me to try this again. So I didn't have my next exit until I was 36. So 9 years later, I sold a massive business to private equity. And the number one thing that held up due diligence and all of this was our books were just not clean. I was launching products like, throwing mud against the wall, firing this and that and the other thing. I mean, whenever we got sued by FTC, they didn't know which company to come after because we were omnipresent with our brands. So when we first started building Amazon businesses to exit, that's the very first thing, David, that I told my business partner, Seth. I said, make sure that our books are clean. I was mentoring him. He was in his 20s, and he didn't know what I was talking about until we went to sell our first brand. And that took way, way, way too long. So really good, solid advice there. In your opinion, David, what's the toughest barrier for sellers to overcome when they decide they want to sell their brand?
I think it's emotional attachment to their business. I mean, I think what you were saying earlier, we work with a lot of serial entrepreneurs, and I'm kind of like that too. I'm amazed that I've been at this business for 20 years because of the way my brain works. But a lot of it is just being clear about what your goals are. And, some people have the strategy, I'm just going to build and keep operating and then, add on and bolt on. There's other people that get to a certain stage, they get bored, or they've, ramped it up and got those rapid increases in revenue and profits, and they want to move on to the next step. So the first step is always just being really, really clear about your intentions. If you're on the fence or you're not sure, you're thinking maybe I should do this, maybe that inevitably ends up being trouble down the road. Like we've had, of course, situations which are heartbreaking where buyers drop out after not getting through due diligence or not being comfortable enough, but it's the sellers that change their mind at the very last minute and so often cut off their nose to spite their face. So I think starting off, you really want to be clear about your goals. It could be a valuation exit number or just a timeline, or just, you're done. And I think that's one of the things we really work on up front is making sure that our clients have that clarity of mind in terms of what their goal is, because without that, it can go off the rails pretty quickly. As far as building a business or going through the life cycle of the business, we always tell people like it's better to start thinking about your exit at the beginning than when you're already down the road, because there's so many things you can do that are, just add value and, that are easy, low hanging fruit, as you said. Some of that is just, establishing a solid brand. It's, you've got your trademarks in place. If you protecting any IP, some people get on there and they, a lot of the Amazon sellers are white labeling and bringing stuff in from China and overseas, and it just gets knocked off really quickly. And you have to try and, I think that one of the things buyers really love is when there's IP, there's proprietary elements, and there's some sort of moat around the business. And that will add immensely to your valuation just by having really strong brand focusing and try to create barriers and protect your product line. So that's a huge element of valuation. Obviously, the other thing from the financial standpoint, buyers like to see a strong trend. They want to see year over year stability or up, growth, and they want to see margins, decent margins. What we found is that on the low end, you see some of the sellers grinding it out for 6 to 8%, and then other sellers that have strong margins are 25 to 30%, and that's something that you don't want to just get into a price war where you're not making any money, because that's not going to that doesn't help you in the long run. So certainly the trend is your friend. The financials are the place where the bottom line is what the multiple is based off of, and other fundamentals, like I said, branding and some of your strategic relationships with your suppliers and whatnot are going to come into play.
I love this. This is my favorite interview today, and this is number 4. So basically, don't wait and wake up one day and decide, hey, I'm going to go sell my business, and then be subject to all of the work and getting things prepped to sell. Like when we create a business from this point, from day one, before we do anything, before we even talk about the plan, it's number one, hey, we're all on the same page. We're going to build a for-profit business with the specific goal in mind to sell this business. So everything that we do now, when we're building the business, is focused on getting that highest valuation possible. We're doing contractual revenue, monthly recurring, super sticky product and service. You threw out a lot of golden nuggets there already. We're not going to have enough time today to unpack every one of those, but there are certain levers and buttons that you can press and pull to increase your enterprise value and to increase, because at the end of the day, the only thing that really matters, Dave, is how much money's in my pocket when we close this deal. Regardless of the structure, we always want to maximize. This is my bread and butter. This is how we approach it. We always want to maximize how much cash we walk away from the table with, because tomorrow is a gift, right? It's the future of the business is a maybe. And I've sold businesses to massive private equity companies and kept 15, 20%, so I can take another bite down the road, and that 15 to 20% equity went to nothing. And earnouts are based on profitability. If you get an idiot in there managing the business, you're not going to get any earnout. So I love all that.
And that's a great point, because there's plenty of deals that are out there and offers, and it just depends in the marketplace. Currently 2022 has been so far quite a brutal year overall. We went from sort of 5 or 6 years of booming, and particularly 2021 was a huge boom with the pandemic and everyone sort of shifting their focus online. But once fear enters the market, I've been doing this long enough. I saw, I was involved with the 2000 tech bubble burst, and then the 2008 Lehman Brothers burst, and now we've had, this hasn't been a burst, but there's been quite a bit of the macro environment has gotten pretty ugly. People are losing money, and there's a lot of fear enters the market, and so and liquidity starts shrinking up. So it's really important to sort of look at the kind of deals that are coming in. Like you said, you can get a fantastic multiple. Some people wave around, I got 7 or 10x. Well, they get 2x up front and 7 on the back end with some of these aggregators that have been promising the world, and now they're in a heap of trouble. The markets have turned, and people are crying about not getting their earnouts and getting so there's a lot. You have to adjust for risk. The best kind of deal is a cash deal, obviously, because you eliminate all the risk, but there's some give and take. You have to look at who's buying the business. Are they a competent operator? What's their history? What's their background? You have to weigh all those things when you're going to negotiate a deal. But our goal is to optimize that and to de-risk mitigate the risks of our clients as much as possible. But you do have to find a balance. In this market now, it's tough. Like I said, liquidity has shrunken up since last year. And so there's a lot of people coming in, wanting to get leverage and get SBA lending and whatnot. And that goes back to having good, having tax returns and having siloed your businesses, rather than commingling everything. So they're all that is entwined.
We've always been a victim of commingling. So in my opinion, David, we're going to talk about some fun stuff here, but the way I always look at this when we structure a deal if I can walk away from the closing with the money, the only money that I'm ever going to see out of the deal, and be happy if I never see another dime, to me, that's a good deal. Obviously,
Yeah.
cash is king. So in a moment, I'm going to ask you to talk about a case study that you might have had. Obviously we have to remain anonymous when we talk about these particular cases. But before we do that, we're going to do something fun. I have a little mid-roll reel here. I'm going to ask folks to go review the podcast. So bear with me just a moment. As you know, Seth and I don't sell anything on the show at the Post Purchase Podcast. So why don't you do us a favor right now? If you'll just go to your favorite podcast platform and just like us and review us, write us a review, give us a star rating. We'd sure appreciate it. And it will help other entrepreneurs like you easily find our show. Thank you. Okay, so let me check the question box here. We got some comments coming in. Looks like a bunch of spam. So go ahead, if you would, David, answer this. Let's talk about a case study, a win that you've had that otherwise your client may not have had that big of a win if they had not engaged your company.
Sure. There's so many. Our goal from the beginning is always trying to over deliver. We don't try and inflate any. Try to sell our services up front and inflate valuations, but we love delivering great results. We had an Amazon seller. One of the things that we do well, and because of our longevity, we have clients all over the world. We have sellers from all over the world working on Amazon. That's what's so thrilling about this, and of course buyers all over the world. And one of the deals we did fairly recently was a transaction with a seller, an Amazon seller that had 2 SKUs. They were from Pakistan. They built this business up to where they're doing 7 figures and serious 7 figures a month. And we ended up, the problem with some business like that is that the product wasn't patented, it wasn't protected. There was a lot of knockoffs, but the momentum was there. We got the business out onto the market and ended up transacting with a NASDAQ public traded company for a low 8-figure transaction, all in cash, it's pretty rare to get an 8-figure deal done. It did take, I think 6 or 7 months to finally conclude the deal.
Wow.
And so this is one, that's one of the things. You have to be patient. Not every deal gets closed in a week, especially larger transactions with sophisticated buyers. But in general, like we're giving, what we do well is we protect our client and get them access to buyers where they would never have that opportunity. And you don't want to go up against a public traded company or a VC or a hedge fund and not know what you're doing. There's just all sorts of pitfalls and negotiation tactics that these companies use. And they often try and go directly to a lot of Amazon sellers because they know that they're trying to avoid the broker being involved and convincing the seller that they shouldn't take the deal, which a lot of times, like you said, like it's better to if you can get a deal done where you're getting the cash you wanted, then any upside or earn out or seller note is just going to be gravy. And that's really what the goal is. If you can get 100% for your company up front, then you've built a beautiful company. You've checked all the boxes off that buyers are looking for. You've got, you don't have thousands of SKUs. You've got, a decent array of products that are selling. You've got reordering. You've got a strong, like what you guys are doing is brilliant. A lot of the things that we hear from, against Amazon businesses is that you don't own your customer list. Amazon does, and so this type of deal that you're doing and teaching Amazon sellers, this is huge because this is the difference why people don't buy an Amazon and they'll buy a Shopify business or a WooCommerce, because those businesses typically are doing a lot more direct marketing and they control their customer list.
Did you hear what David said? This is huge.
Yes.
Because Amazon puts that wall up between the buyer and the seller. So the better relationship you can have with the end user, the more valuable your business is, right?
Yeah. And this is an asset of the business. When you own your list and you can market to that list regularly, that's the low-hanging fruit. That's, again, the 80-20 rule. You've already sold to a customer and you've satisfied them and given them a great value. Their likelihood of buying from you again is extremely high. It's a lot easier to sell to that person than it is to try and get another customer.
And it's
And
less
so
expensive. You know, it's
yeah,
10 times more expensive on average for us to go find a new customer than it is to just sell our existing customers. Can you
yeah,
give us a little history about why you created Website Properties? I know you told me that before when we were in the green room, but
sure.
now that we're live, tell folks where you came from and why you decided to create this.
Right. So as I mentioned earlier, I had been traveling after university, and I had come across these hammocks from Mexico. Fell in love with them. Ended up thinking, oh, I'm going to bring these back and sell them. And I started off doing that, and it kind of went from fairs and festivals to malls, and then on mail order. And then when the internet came along, I was like, oh my God, I've got to, this is exactly what I need to do. So I got online like mid 90s and built what turned into hammocks.com, into a 7-figure business. And I had 2 young kids and decided I wanted to exit and take a break. And when I went to look for someone to broker the business, like I said earlier, there was just no one at the time that understood the fundamentals. So I ended up representing myself. I sold to a large company, which turned into Hayneedle. They're the equivalent of what Wayfair is. And I also sold, after I sold hammocks.com, I didn't, I made a deal that had a back end that never got realized. They wrote a 65
Welcome
page,
to the club.
65 page contract that never got realized. I kind
We
of
call that the wiggle clause.
Yeah, the wiggle clause really kind of like that was the one thing I regretted, but it really fueled my motivation to help other entrepreneurs, and that's really where I get that's the why that drives me. I mean, I think you have to find purpose in what you do to drive that, to have the passion, and like you guys, you have the passion to help your fellow Amazonians. And like myself, I'm first and foremost an internet entrepreneur, and I want to help people with one of the.
Don't say that out loud, David.
One of the most.
I'm an internet marketer, man, but usually I go around telling people I play piano in a brothel because it's a lot more. It's a lot easier to digest and a lot more socially acceptable. I love the wiggle clause, man. I tell you what. I collected, this is funny. My second exit was 8-figure exit. I'm 36 years old, way more money than I deserved. God loves me and continues to bless me, right? Thankfully. But
all that clean living.
Apparently something. So basically this, I left $50,000 in the bank account, just, so they can make payroll and, during the transition. And so they give me a position. We're going to give you $10,000 a week as a consultant to sit in here in our boring meetings and tell us what you used to do. Well, after exactly 5 weeks of my $10,000 per week consulting, they said, all right, we don't need you anymore. So basically I got my 50 grand back, and that 15% equity that I kept went to absolutely nothing. And I didn't collect any earnouts, but I did walk away with plenty enough cash where I was happy. So be careful of the wiggle clause. I just have to reiterate that. Who right now, David, would be the perfect client for what you do at Website Properties?
Well, I mean, the range of businesses that we sell are largely between $250,000 and up to $100 million. I mean, there's many more buyers in the $500,000 to $2 million range. There's lots of interest. There's a lot of like companies that are sucking up smaller deals where people have reached that level that they can get to, and so like we treat everyone the same. If someone comes in with a business that's $250,000, we're not going to do anything different than we would with someone that's got a $25 million business. We have buyers for every range. The larger the deal, the more sophisticated the buyers are, and the transactions can get a little more complicated. But for us, the ideal client is an online business, a digital business. Obviously, Amazon FBA businesses are highly in demand. I mean, currently, one of the points that the questions we get or the needs feedback we get are from buyers are they're looking for, they don't want businesses that have thousands and thousands of SKUs to manage. They're looking for really clean, niche focused brands that have done a good job with protecting their IP and have some sort of unique proprietary elements, and a large addressable market. So those are things that, for sellers to think about. But ultimately for us, we've been in this for 20 years. We have a large double opt-in subscriber list. It's very targeted. It's over 40,000.
Buyers. These are buyers.
These are buyers. These are VCs, private equity, internet entrepreneurs, all the aggregators.
So let me get this straight. So you actually have 40,000 person list of a captivated audience, double
Yes.
opted in of buyers who are ready and willing to write checks when a business goes up for sale. Did you guys hear that? David is the man. He's locked and loaded and ready to go. So when it comes time to prep your business, or if you need some advice or consulting on that and you're ready to sell, then websiteproperties.com, you need to talk to David about this. David, if there's one thing or one thought or idea that you want our listeners to take away today, what would that be?
Just stay focused on your goal, and work hard. There's no real, the fundamental formula is just hard work pays off. Work smart, utilize systems, follow people like Sean and Post Purchase Podcast here, because they're offering excellent advice and ways to build your business. And that's what build your business like you'd ultimately like to. If you were to buy the business, you would check all those boxes off. And I think it's just hard work smart, and someone's gonna love your business. What we do is that we're facilitators. The business should essentially sell on its own merits. There's no magic formula. If you've got a great business, it's got great fundamentals, someone's going to buy it, and they're going to pay handsomely for it if you don't just operate from mediocre kind of standpoint. So
love it. That's what we tell people who come into our Post Purchase Pro program. We tell Amazon sellers, look, if you're selling a product that people don't like, if you're selling a crappy product with a 3-star review, I can't help you. I've literally failed every single time. But if you're selling a product that people like, then I've never failed, not once. We know we can help you. What about the state of the market right now for sellers? I know 2022 has been kind of crazy. A lot of SaaS companies are in our space are getting bought up by these aggregators. But what about physical products? What's the state of the market? What are you seeing?
Well, certainly 2022 has been a downturn from previous years. I mean, there was so much liquidity and so much stimulus, and people were throwing money around like crazy, and the multiples were higher. Once fear in the general marketplace enters, it definitely affects everybody, but there's certainly buyers out there. Physical products, I mean, there's plenty of products that thrive in recessions, and there's the talk of recession in 2023, whatever. Those, there's a lot of fear porn out there. I think you just got to, products people are buying all the time. I mean, if your product is something that's a necessity versus luxury, you're going to have an easier time going into a recessionary period. But there's buyers out there. Quite frankly, there's so much uncertainty in the stock market, in the bond market, with commodities and crypto. Everybody's like, where do I invest my money? Well, people start figuring out pretty quickly that a great place to invest your money, where you can command a 25 or 35, 40% return on investment, is coming in and buying a cash flow positive business that's got solid fundamentals, good history, and is relatively stable. That's a hell of an investment, and it's a lot safer because you control it. You don't control what happens in the public markets. There's a lot more risk. So I think there's a lot of buyers that are coming back in. They understand that, and I think sellers just have to understand, like, if you are sitting on cash with inflation eating away at this, you've got to put your money somewhere, and there's not a lot of places giving safe returns. In this market, particularly, this is what we're pitching, and we're finding investors are coming in droves. And so, yes, there's a lot of interest in SaaS. We sell a lot of SaaS businesses. There's a lot of aggregators because SaaS has that subscription-based model. It's that monthly recurring revenue. And so for Amazon sellers that have the ability to sell products, renewables, a lot of supplement type companies have this. Building a subscription-based model within your Amazon business is a really great avenue. And finally, I also think that the other thing is to diversify in other channels. Amazon's a great place to get started. It's a massive market. You should be in there, but there's also there's a lot to be said for diversifying into other channels and internationally as well.
Love it. And your own customer list. Don't forget your own customer list.
Yeah, and utilize the service. I mean, this is I only became familiar with Post Purchase Pro in this past several months, and I just think it's that's the killer ingredient, because that was missing with a lot of Amazon businesses.
You're right.
And the dirty little secret, you don't own your your most valuable asset, which is your customer. So
Exactly.
this is an excellent strategy to pursue, and it's going to add value to anyone that pursues it. So
Well, Uncle Jeff knows how valuable a customer is too. That's why they're hiding that from us. So I'm going to ask my last two favorite questions. These are just for fun. But before I do, here's a quick message. Hey there, it's Sean Hart. If you found the information on the Post Purchase Podcast useful and impactful for your business, do us a favor and your colleagues a favor. Share this, like us, and let others know how to find us on your social channels. We'd sure appreciate you. Now let's get back to the show. Thank you. Okay, David. So here's my question for you as a businessman. What's your all-time favorite business book?
Well, there's probably a couple. One of them may not be, considered a business book, but I think it's fundamentally First Principles. That's Viktor Frankl's Man's Search for Meaning. I think that really is an incredible book about just finding the big why in your life, what drives you, what motivates you, what keeps you, moving forward despite incredible adversity. It's a great read. But another great book that I love that I relate to a lot is Grit by Angela Duckworth. It's grit, power, passion, and perseverance. And I think anyone that's an entrepreneur can relate to that. It's not about being a genius. It's just, when it comes down to it, people that are successful are just grittier. They're grinders. They get in there, they roll up their sleeves, they overcome until they become. And that's the secret, I think, in any business. That's what I've seen. We've sold over 600 businesses, close to somewhere between $500 million and $1 billion in sales over 20 years. We've had thousands of conversations, and really it distills down to just people that are passionate and hardworking are generally the most successful. It's pretty straightforward.
So all this talk about business and making money and selling 600 businesses, and you're throwing B words out there like billion. This is my favorite question to end with, and that is, what's something that you have purchased in the last year that may be considered a splurge by some, but David does not regret?
Well, I'm my alter ego is a rock star. I'm a drummer, and I bought a beautiful new set of drums. That's my therapy after a long day and dealing with the emotions of negotiating 7-8 figure deals. That's my respite. That's where I go and find a release and a lot of creativity. So
I love it.
What's that?
Right, respite by percussion.
Yeah, exactly.
Now, is this the best email for folks to reach out to you? Beverly at websiteproperties.com.
Absolutely, that's a great place. I'm happy to speak with anyone and set up calls. Like I said, we give free appraisals on businesses. We give free guidance. There's no pressure sales here. We're interested in working with people that want to sell and are motivated and have great businesses, and we're here to serve. That's what drives me, and that's what's kept me in this industry for 20 years. So I'm excited to speak with anyone that wants to tap our wisdom and our archives of knowledge.
Thank you so much, David, for taking the time to speak to our audience. I know the message is well received. For those of you out there thinking about, well, this is my lifestyle business, this is my legacy, I don't want to sell it. Believe me, when someone comes along and they're going to make you an offer that's so insanely good that you're almost going to feel stupid to walk away from it, it's better to have all your ducks in a row ahead of time. Even if you don't think you want to sell, once you do make that transaction, hopefully you don't get bitten by the bug and become almost a sickness like Seth and myself. Like we can't even stand to do anything new without the thought of, all right, where are we at here? 3-year, 4-year, 5-year exit. We're out of here. With my entrepreneurial ADD, I can't stand it. About 3 years in, buddy, I don't care how good or bad it is. I'm ready to cash in and go somewhere else. And we just keep getting better at it. I'm feeling like Post Purchase Pro is my magnum opus. Like this is
beautiful business,
a holy grail. Yeah. And
we got to love it. And we'll talk let's talk when you're getting ready to have that exit. But I think that what you said is like, you got to be thinking about your exit. You have to be clear on what your goals are. And listen, it's not a bird in hand. Like if you've run a business for 3 or 4 years and you can sell it and you get 3 or 4, 5 years worth of value out of it, that's a security in an uncertain world. And you can always, most entrepreneurs have another 10 ideas and the experience and wisdom that they've gained from their first business. And as you can attest, it's just the fun of creation. That's what we find majority of entrepreneurs love the creation of the business, the operations. That's for that's for a different mindset. But
That's for the other
you
team.
yeah, but it's a great feeling to get like it's like winning the lottery, and it's a huge moment, and that's why I love this business because you really change people's lives. As you know, like it's when you have that first big win, you can buy a house, you can buy property, it just gives you freedom. It
It sure does.
maybe covers your kids,
It feels good. It
college.
authenticates you as an entrepreneur. It makes you feel like, okay, now I've attained this, and then it becomes like a game. And the way
Yeah,
you're giving information and dropping these golden nuggets, David, instead of us playing in this someone else's card game, you're giving us the ideas and the tools where we can be dealing the cards when we're building that business. And I super love that. We're definitely going to have you back on here. Normally we go 20 minutes max. I could talk about selling businesses all day long. It's my passion. I love to create and grow. We love to go out there and create value in the world and get paid for it by serving others. And I can tell that you have the same passion. So we're going to do this again, but don't go anywhere, David. I'm going to talk to you in just a moment. Okay. Thank you. Thank you so much.
I appreciate it. Thanks so much, Sean.